I've taken the second trade and the third trade of the challenge. Now, probably you're wondering why I'm saying the second and the third. A few years ago, around 3 years ago, I made an impulsive decision that was wrong. It was not a planned trade. So, and rightfully so, I was punished by the market. So, I'm saying I was punished by the market not because the trade lost. I'm saying I was punished by the market because I took the trade that I was not supposed to take. And let me just put in the history so that you can see. I took an impulsive trade here that was not in accordance to the rule. Usually, it was so far away from my area. I wanted to take a trade here. I'll explain more in the trading view. I wanted to take a trade around near the wicks of this previous week's low, but impulsively I took a trade here which was wrong. Now I've taken another trade that is now according to the plan. So this one, whether losing or winning, will not affect so much how I'm viewing my commitment to rules of the challenge and my trading system. But the previous one was totally wrong. I'm not supposed to take. It was an impulsive trade. Well, is breaking rules part of the trading? No. Does it happen sometimes? Yes. But the most important thing is now the commitment and the approach to resolve it. And I'm going to explain how actually I'm going to a bit try to slightly mitigate the risk of making a wrong decision. And one of the first thing I've done immediately is to reduce the risk. Remember, the agreement is to risk $3 per trade, $3 per trade. Right now for this trade I've risked 2. Why 2? Because let me see. 2. Let me just come here. As you can see, just it's around 1.8. 1.8, 2.1. Yes, around 2.09 here. So I've already reduced the risk by almost 33%. Sorry. To ensure that the mistakes that I committed on the previous trade is erased over time. Why over time? Because if I'm saving 33% on every trade, then after 3 trades, I will have saved 1 hour that was wasted on the bad trade. I'm not saying wasted because it lost, wasted because it was not planned. So it's so I'm targeting here, which is $12. So if we had taken $3, it would have been 1 to 4. But this time we have taken $2 risk, which means it's around 1 to 6. That is now the challenge of making mistakes in Forex. Literally, I would have targeted something like around, because if I targeted 3 multiplied by 6, that would have been around 18. But now I have to take 12 because I've reduced the risk. Either way, it's part of it. Before I go to the trading view to explain why I took this trade, let me show you the previous trade we took. The first trade we took is GBP out. It was a short trade. It's still running. It hasn't done much. In the morning, it made this move. I thought it will continue, but again, made huge bullish push. It came back to our break-even level, our entry level. And I have to also big up myself. A few months ago, if I had seen this bullish momentum against me, I would have exited this trade immediately. But I remained calm. Even my heart didn't flip, didn't even skip. So it's something, whether this trade loses or wins, somehow I have to big up myself. But that is a story for another day or a different story. Let's just go to this trade. I explain why I took it. Let's go to the trading view. So the story of this trade started on the weekly time frame. So on the weekly time frame, let me just close this one so that you can see the chart well. This is where the price is on the week. I zoomed in because for me, my approach is always to see, I first see the price reacting, then I ask myself, where is it reacting from? So last week, when I was doing my weekend analysis and going through the charts, I saw the price on USD Swiss franc is here. It's reacting on weekly supply zone. So because this is another block, there's a gap here that was filled, then there's this big push on the weekly zone. Now, you can even see the price was rejected here, went up to this position, then came back several weeks later. But of course, the essence of looking at that weekly time frame was just to see where is the price reacting at? Then we came to D1, just as a by the way again, to just confirm that level. Again, let me just scroll to where the price is reacting from. Let's just, you see it's reacting at this position. Let me just zoom so that now they're visible. This is where the price is reacting. You can see clearly there was a massive sell, then massive buy, confirming supply both on weekly and D1 that took out this area, which is a good supply zone. Of course, the price came back to this zone after a long time. Now I came to the lower time frame to start seeing how I'm going to take the trade. Now last week the price closed on H4. The price, remember, let me just explain something else before I can go to the specifics of that trade. When the price started making bearish moves, it reacted on this trend line twice, here, then started making huge moves before showing any bullish momentum. Again, made a move before. And remember, the distance between this place and this place, where the distance between bearish moves and bullish moves is reducing as we go into the supply, the demand zone that I've just explained. For example, this distance is longer than this one, and this one is longer than this one. Why? What does that suggest? It suggests that now the bears are getting weaker and weaker. And for the first time in probably more than 2 weeks, on H4, a bullish engulfing has formed. And where has it formed? It has formed at demand zone, which is both weekly and daily. Now, that happened last week. So I came today in the morning, and I did that over weekend, and I looked at lower time frame. I looked at M30, H1, and H1 was not giving me clear change of character, in as much as I saw this huge bearish momentum being engulfed immediately. So I wanted something at least which was already giving me confidence that the price might now go back to at least pull back, not turn bullish, but at least pull back on that time frame, which is enough for me to catch a move. Then I checked on M30 and I realized the price changed character. Now, remember, for your own trading, you better decide which time frames you want. For me, I use a lot of confluences, which suits me, but you can make a decision on whether that. And remember, it's additional confluences I'm not looking at, because when I look at this position now, M30 was doing this move, which means it was making lower lows, which was a downtrend. Then at this position, which was the last swing, let me delete here, this was the last swing. Last week the price closed above it, which for me was a change of character. Now, will that matter if that behavior happened in another place that is not in a D1 demand zone? No. If I saw that behavior anywhere that is not my prime entry points, like demand zone, supply zone, support and resistance, I would not have cared anyway. But this one mattered because now it has happened at a demand zone on D1 and and H4, there is a bullish engulfing, the price is reacting at D1. So already this one gave me some form of strength to actually now decide to be on the side of the bulls. Now in the morning, this is where I made the first mistake, the one that I've been playing on MT5 here. After this sweep of the Asian low, I was a bit hesitant, but it wasn't a good trade. That's why. And besides, it's better to trade USD pairs during the New York session, but it was London. It was a bad trade. Just to summarize, it was a bad trade. If this one loses, I wouldn't actually beat myself up. But this one, I was not supposed to take it, as I explained. So usually I prefer the price sweeping liquidity into my area. So remember, M30 has changed character. So I wanted now the price to create a zone, sweep it, and now show me another confirmation. That's exactly what the price did. Why I lost the trade here, where my previous stop loss was, it was taken out. Now, after being taken out and landing into this area, I was looking now for confirmation every time and again. Now I came to M15. M15 is the where I got into. After sweeping this one, the price formed this morning star. But that was not my entry trigger. I wanted a pattern because H1 had not closed. If H1 had closed according to my rules, I have to wait for a pattern. But if H1 has closed, then if I see this morning star, I can just take the trade. But since the 3 p.m., the candle that closes at 3 p.m., which is 30 minutes away from London Open, had not closed, I had to wait for a pattern. Now, M15 pulled here and formed another bullish engulfing. Immediately I saw that bullish engulfing, I placed a pending order here. Now this candle here, this hammer is the one that tapped me into the trade. So I took the trade here. After this bullish engulfing, because H1 had not closed, I tried to reduce the stop loss as much as I can. But because I was risking very little, I ensured that I extend at least a stop loss so that, because it's a reversal, there'll be a lot of wicking. So I don't use very tight stop loss for reversals. So I placed a trade here based on that explanation. Now targeting. Why did I target where I targeted? So let me just remove this one. Okay, let me just remove this one. Good. Targeting was based on, let's go to H4. H4. Why? When I zoom in this trade here, when I zoom H4, you can see it's bearish. This was a major zone that was tested multiple times, 1 and 2 and 3. After the break, it was retested. Now, my anticipation that the price, given that the price is reacting from a D1 weekly demand zone, I'm expecting that the price may pull back to at least to test the place that was previously broken. That is support turning into resistance. Now, the extreme end that I'm expecting the price to pull back to is this area. But I may decide to target that end, but usually I don't do that. I usually try to target the half of that area so that I increase the probability of my trade being hit. So that's why I anticipated the price come to this line, but I decided to target a half or 67% of that level. But where do, and most of the time when I do that, now I start looking at a place where there's things like equal highs, similar levels that probably the price will be interested to take out. Now when I come to H1, you can see here we have these highs that are equal here, these ones here. They're almost arranged here. So my expectation is that the price may come to this place at least to sweep this area. And remember, there's a small supply zone here. So I want to exit before that. So that was my reasoning behind the targeting. So this is our second and third. When I'm posting this video, I'm labeling second and third trade. And when I'm reviewing now, I'm going to review the third trade because I already reviewed the second trade of this. But remember, in the challenge so far, we've lost one trade. And that trade, I was not supposed to take it. It was a bad trade. And I'm committed to ensure that in future I don't take such poor trades, because I want to take a trade that when it fails, then I can 100% know it was part of the plan, but it lost. Otherwise, that is the second trade of the challenge. Wish me luck. Subscribe to the channel. Let's learn together. Share, comment, and subscribe. Thank you. Bye-bye. Good luck.